G'day, I'm John Dasley from C&K Accountants here in Taranaki. Now, for many years, we've been helping rural businesses navigate the complicated world of tax and compliance. And today I need to talk to you about something that changed on October the 13th that could seriously impact your business. The IRD just made it much easier to damage your business credit rating. And too many people will have no idea that this has actually happened. So let's break down what changed and why it matters, and most importantly, what you need to do to protect yourself to make sure that it never happens to you. First, let's make sure we're on the same page about what credit reporting actually is. Since September 2017, if you have significant unpaid tax debt, the IRD can report you to Centrix, New Zealand's credit reporting agency. This shows up on your business's credit file, just like a personal credit rating. Now, why does this matter? Because your credit rating affects almost everything, whether that be getting seasonal finance for feed or fertilizer, refinancing debt or securing new loans, or purchasing new farm equipment, buying additional land, or even passing your bank's covenant reviews. For many businesses operating on a seasonal cash flow, a damaged credit rating isn't just annoying, it can be business ending. Before the 13th of October, the IRD had to jump through several hoops before they could credit report your business. First, the debt threshold. You had to either owe more than $150,000 or have debt that's been unpaid for a year and equals more than 30% of your company's assessable income. Second, reasonable efforts. The IRD had to make substantial attempts to collect the debt. They couldn't just send automated letters and then call it done. And third, formal notification. They had to formally notify your company and the individual directors 30 days before credit reporting. These rules meant if you had tax debt but were engaging with the IRD, or even if they hadn't really tried to work with you, you had some protection. That protection just got a whole lot weaker. So what has actually changed? On the 13th of October, the IRD rolled out a pilot program with 3 major changes. Change number 1, the reasonable efforts. This has been watered down significantly. Under the new rules, reasonable efforts now means the IRD just sent their standard overdue reminders and offered payment options. That's it. Even if you hadn't engaged with them, they'd made the effort. No phone calls required, no meetings, no real attempt to understand your situation, just automated letters. If you've been thinking, I'll sort that IRD debt out next month, you're now playing a much more dangerous game. Change number 2. Only if the company gets notified. Previously, individual directors would be notified before any credit reporting happened. Now they will just notify the company. The notice of intent appears in your MyIR account and gets couriered to your registered office. This could be your accountant's office or your solicitor's office. If you're not regularly checking your MyIR account, or if your registered office is your accountant's address and then there's any mail delay, you could completely miss the notification. Change number 3, the 30-day clock starts immediately. You still get 30 days to respond, but the clock starts the moment that the courier delivers the notice to your registered office, not when you see it, not when you get around to checking your MyIR account. If that envelope sits on a desk over a long weekend, you've already burned 4 days of your 30-day window. So let's have some real examples. Let me give you 2 scenarios that might feel familiar. Seasonal finance. 400 cow dairy operation, and you've got $180,000 outstanding in unpaid GST with the IRD. They've been taking token payments, but there is no formal arrangement in place. Spring hits, and then you need to put a facility in place for $250,000 for feed and fertilizer. The bank will run a credit check and finds that the IRD have credit reported you, and then can decline the facility. Now, without that extra additional feed and fertilizer, your production could drop and could mean a significant loss in income to you, all because of $180,000 in tax debt that could have been managed with a payment plan. Scenario 2. The family has been negotiating for the past 18 months to buy a neighbouring block. They've got a conditional contract on the property, conditional on finance. The company has unpaid taxes. They've been making irregular payments, but no payment arrangement exists. The IRD sends a notice of intent to the accountant's office. The accountant is on leave, and by the time the family finds out, they're on day 28. They scramble to set up a payment plan, but the IRD reports them anyway. The bank pull the plug on the finance. The deal falls through and potentially lose a once-in-a-generation expansion opportunity. So, what puts you at risk? You're vulnerable if you meet either of these thresholds. Threshold 1, 150,000 or more in unpaid tax, regardless of how long it's been there, or your income level. Threshold 2, debt unpaid for 12 months. That equals 30% or more of your assessable income. That second one catches people out. If you're a farming operation and has 500,000 in assessable income, you're at risk with debt that's been sitting there for a year. For a seasonal business, a year passes fast when you're focused on operations rather than those envelopes from the IRD. So here's your action plan. Step 1, check your MyIR account today. Log in right now and check any notices of intent. Then make it a weekly habit. Step 2, set up a formal installment arrangement immediately. Don't wait. Even if you've been making payments, formalise it with the IRD. Call them on their 0800 number and make a payment arrangement. A formal payment arrangement, even modest payments over a long period, will prevent the IRD from credit reporting you. The IRD generally prefers a payment plan to be put in place rather than damaging your credit rating. Step 3, confirm your registered office. Make sure the mail to this address reaches you immediately. If it's your accountant's or solicitor's office, ensure they notify you straight away when the IRD correspondence arrives. Talk to your accountant. We help negotiate payment arrangements with the IRD. We know what they'll accept and how to structure it to suit your seasonal cash flow and how to best protect your credit rating. Look, I get it. When cash flow is tight, the feed bill and the vet bill feel more urgent than the IRD payment. But with these new rules, ignoring tax debt has never been riskier. A credit report stays on your file for years and can limit your options exactly when you need them the most. At CMK Accounts, we've been helping Taranaki rural businesses for more than 70 years. We've seen the damage that tax debt can cause, and we've helped countless clients avoid it by proper planning. Don't wait until you get that notice of intent. Contact us today so that we can help you navigate your debt with the IRD. Thanks for watching. I'm John Dasley from CMK Accountants, and I'll see you next time.